And welcome to another Pepperstone live event. We're excited today to bring you everything in what is a hot week, the beginning of earnings season in the US, and of course, that all important inflation number coming out. My name's Thomas Atkinson. As always, I'm joined by Tyron Abella, and today we'll be talking to you everything about stocks, commodities, cryptos, and of course, currencies. And there is a lot going on. So, Ty, how are you going this week? And I'm sure you've got a good pick later on today. I heard that some of those picks have been doing pretty well recently.
Uh, yes, hi, welcome everybody. Yeah, look, great markets to be involved in at the moment. We've got some exciting things happening. S&P keeps cracking new highs week on week. Going into the earnings season is going to be very, very interesting, actually. So looking forward to jumping in and checking out some opportunities that we can hopefully take advantage of.
All right. Well, we've got a quick risk disclaimer before we get stuck into everything. And as we always want to ask you guys, if you have questions, please feel free to put them in the comments down below and we will answer them throughout the live session. And of course, if you ever have any other questions, put them in the comments. We'll answer those as well. Give it a thumbs up. We'll see you in just a moment. All right, Ty. Well, the best place for us to start for everyone this week is, of course, the all-important US 500. We'll go through a few of these indices and then we'll jump into some currencies because they will probably be moving as well. But the US 500 pushed out last week, and I thought we'd do a quick educational component here to begin with. And we kind of we touched on this last week when we were looking at it basically on Wednesday. But I just want to kind of reiterate how important it was to see this candle closure. So if you're someone that trades the futures with Pepperstone on TradingView, MetaTrader, or any of the other platforms, it's really important that you understand that key levels matter so much. And we knew that a break below the 54.40, 54.50 was really important. We discussed the idea that these wicks, Ty, were going to show us strength. And basically, as they wicked up and we eventually got that close, remember the close is the key. And this close was an all-time high. It signified that the market would probably try to move towards the next key level. And in this case, it's always going to be that next 100 points. Why? Well, we're in uncharted territory. We're in all new highs. And what that really helped us to do was to kind of define an edge, define a level that we were hoping to go towards, and of course, therefore, be able to trade that on the smaller time frame. And one of our favorite things, Ty, at the moment is, of course, to be able to see smaller time frames doing what we would expect, which is a series of higher highs and higher lows. And that's exactly how the US 500 has been trading at the moment, hasn't it?
Yeah, it's been lovely. From a trading perspective, it's been really, really easy. It's about the things that we talk about, week in, week out. Pullbacks of the 20 moving average, joining in the direction of a very powerful trend, joining momentum, and trading can be so simple when you actually break it down. It's really, really good to see. And the S&P has done in every time frame. If you anything under a daily, you're going to see a very similar occurrence. So it's been really, really good.
Morning, Michelle, Grace, and Frasato as well. Great to have you here along with everyone else that's joining us. But yeah, just a series of higher highs and higher lows. Now we face off with the big level, Ty, 5,600. Now there's a lot of options sitting here. This week is, of course, inflation week. And for anyone that doesn't know, inflation week, in this case, it's Thursday. That's the important factor. And it's at 8:30 a.m. New York time. So that's going to be where scalpers and day traders beware. Often we find the best is actually setting up after. So what that means is you have patience to find the key level. So let's say 5,600 is hit and then it finds a reversal upon that. Maybe that will give you a short for the rest of the session. Or maybe the initial reaction is really, really negative towards the inflation figures. And we come down to key levels like this where we expect bull demand to maybe take over. I think this is going to be a reactionary play no matter what really we're looking at, whether it's oil, whether it's gold, whether it's indices. There's a lot of key levels to mark out. And Ty, we really like the idea generally of looking for liquidity and reacting to that. So I'm thinking this week, some key levels for people to mark out: 55.30 to 55.40 and 5,600 to 5,610. And this is where I'm seeing potential resistance. And this is where I'm seeing potential initial support. What are your thoughts on the levels?
Yeah, I think they're great. I think they make a lot of sense for a lot of reasons, but I think we find ourselves right in the middle of them. So I think there's a bit of a trading opportunity there, just in that where, really you can join whatever trend it goes to. If it starts to weaken off, I think, getting back down to that 55.40 to 55.50 is as good as any trade you're going to be able to put on. But also on the flip side, that 5600 to 5610 can also work out. So really, wherever the smaller time frames start to trend, they're the direction you want to jump on. And I think both of them have a very valid case.
So we'll just quickly go through a couple of other indices, just quickly snap through those. And I just want to kind of mention, obviously, Dow, you can see it's more sideways, but it's still trying to grind its way up. Certainly a very different looking market because, of course, it doesn't have necessarily the main kind of stocks in it. And then, of course, you've got the NASDAQ. So generally speaking, when you're looking at the NASDAQ, we'll just use Qs here for a moment. Just so you can see the ETF and what it's looking like. It's been just going super high on high and high and high. So we've got markets that are different. We've got the US 500. We've obviously got the NASDAQ, and it's just continued to go very strong, thanks in part to the Magnificent Seven stocks, in particular Tesla, which we've covered a few times. We'll go through that later on today's show. Absolutely going bonkers over last week. A few semiconductors like Intel and also AMD picking up steam, which we've been talking about. But it's a tale of multiple markets, and really it's still a very concentrated market at this stage. But where I think the interest is not necessarily in the big tech at the moment. It's actually in a few other things. And I think this is going to possibly lead into some of your discussions later on. But we'll go over first to the metals markets, because we've been discussing this for a while and we saw it happen last week. Now, we discussed copper, and copper was one of the things that we were looking for a breakout on, and we got it last week, and it led into some amazing momentum into the first resistance, and now we're getting that nice pullback back to the daily 20 moving average. What do you think of this 20? Do you like this zone? Have you done much study on copper at the moment? Do you feel like this could be a very interesting level for the metals market?
I actually do love that level for a couple of reasons. I mean, obviously, we've got the 20 moving average there, which is fast approaching where price is, but also the recent action that you've got that line marked there. Those moves there are extraordinarily strong. I mean, you've got it's going to be effectively pulling back if it comes back anymore. To the moving average is going to get there eventually, unless this absolutely capitulates. That moving average will be there in a couple of days, and I think that's really going to bolster what's already a pretty strong level. I mean, look, if we were looking at a fib of that move, it's probably only going to be a 23. It's going to be a very aggressive fib. It's going to be probably 23.6 at this stage. I wouldn't have thought it would be even 38.2, would it?
It is, 38.2 at the moment on this one.
Yeah. So really, a 20 moving average just sort of, catching up to that. And you're going to have, 4 very, very significant reasons for that support to hold. So we love those trades. We love it when, different things are lining up to give it an extra level of support. Fib traders are going to be there. Moving average traders are going to be there. Roll reversal support, resistance traders are going to be there. And just as importantly, price action momentum traders are going to be there, Tom. And when you've got those 4 on your side, things bode very, very well. But of course, as we know, if all of those things get broken, look out. You'd be running for the shelters because it could be a bit of a bloodbath after that. So we would fully expect that they would hold up at that level.
Yeah, I'd like to see copper hold around this zone, and that kind of brings us into gold. And this is probably the one more people like to trade. And we've kind of got 2 main levels here marked out this week, the first bull level on gold after its nice breakout last week. Actually, a lot of the things we were talking about last week in the trades, we were discussing this literally as we saw it. And we talked about the inverse head and shoulders. I'll just quickly mark this out because it's what we call proofing. And I love doing a good bit of, I hope you guys like a little bit of education while we're going through these live market analysis. But one of the things that Ty and I realized and like so much about inverse head and shoulders or any type of pattern is that you want to be able to proof that pattern. So you take this distance and you extrapolate that out. And if that goes into a key resistance or supply, which it does over here, then that usually strengthens the case that it will get there. And it becomes a much clearer path towards, I guess, victory or where you would hope it would go. Now, that's exactly what did happen. We found some structure. We found the market go up higher even, and then it pulled back. And at the moment, it's trying to consolidate. Now, I'm looking for a couple of key levels to see further momentum, Ty. One of those is 23.80. And the other one is going to be, if it does keep coming down, that can't get through 23.80 first, then possibility of a 2330, which is back in here. I like both of those areas. I'm kind of, obviously I've been talking about gold for a while. I'm kind of hoping gold does go for the big breakout. Interested to see what the chat thinks of this. What do you guys think about gold at the moment? Do you have any targets on it? First target, if it goes through 2380 for me, is actually going to be around 2420. Ty, are you feeling that the gold bulls are back and silver bugs, or is everyone still sleeping? What do you think?
I think we're going to find that very, very shortly. Actually, I think a move is imminent. Really, we talked about it last week, and we got that breakout already. I think I do like the all-time high. I'm not going to lie. I think that the potential for that move to that basically 2420 area, I think is a very solid one. I like the pullback that we've got here. Of course, it needs to hold up. Hey, we're price action traders. At the end of the day, we're always looking for price action, so we can make all the calls we want. We won't actually act on this until it actually happens on the charts in front of our eyes. That patience, react, and don't predict. It's not just a saying that we've got on a chart. We actually abide by that when we trade. It's extraordinarily important, Tom, isn't it? That if you wait for momentum and you wait for the price action to kick in, the chances of a successful trade increase exponentially. There's no question about it. So you've got to be patient, and I think this is doing all the right things. And if we get that continuation and a break above, like you said, that little mini zone, I think the all-time high is in serious danger.
Yeah, I'd agree with that. For a long time, for anyone that's been watching this show for a long time with us, obviously I'm a bit of a fan. I think eventually gold is going to get back to, or get to a new level of $3,000. But in terms of the actual price action at the moment, ultimately, even if we have a bias on something, that's more of an investment philosophy. As a trade philosophy, we must see price action. We must react to the market saying, I'm ready to move to that next level of equilibrium. It's so important. Now, I have a mention here, Ty, from Sell by the Barrel. It says, more excited about silver, but target is the moon. So he's a fan of silver at the moment. So one of the combos we've used, and if you're a first-time viewer, you should start using these kinds of combos, is to understand relative strength. So whenever you're a trader, swing trader in particular, it's important to know whether something is underperforming or performing well. And here what I've done is I've put in silver / gold. And what this does is it compares silver price versus gold price over time. And you can see there are periods in time where silver has been valued much higher than gold, in a ratio, and much lower. And what seems to be kind of like a nice average is around the 0.015. Which kind of points towards silver being fairly strong, maybe if gold does start to push out. And one of the reasons why that is because when we look at silver, it's playing catch up. Is silver at an all-time high? Quite simply, no. Is gold? Yes. Has silver been low for a long time? Yes. And it did get what was considered an incredible break a little while ago on the higher timeframes here on the weekly, which is kind of pointing towards, 36, maybe even 44, very significant moves in the future. So I can see why people are excited about silver. It's what they call silver bugs, but very similar breakout. Took a new high, stopped this kind of consolidation to the downside. And I think the big thing here, Ty, for me was this downward trend line. So once we started breaching through that, you can see it respected it. We got above quite a few significant things. We obviously also have held the 20 moving average on the weekly. The weekly close, I thought, was magnificent. How important is this type of thing for you, this weekly close?
Oh, it's extraordinarily important, especially when we've got a trend line that's going down like that. Look, daily closes are extraordinarily important for normal trading. There's no question about that. But when we draw closer to the end of the week and we can actually get a weekly close above a key level, it really sets the tone for the next week or two, because weekly candles don't often just react for 1 week. Like, quite often that trend will continue. So the fact that it's broken a key zone, will break a key zone if it closes there, is very, very significant in your forward planning. I think it's an underutilized chart, the weekly, Tom, a little bit, isn't it? Like, a lot of people sort of think, we don't trade weekly charts. It's not going to be. But what you're really looking for is that momentum. You need that change. That momentum is really, really important. And weeklies, look, the thing about a daily, why we love a daily candle close, Tom, we've got 4 or 5 very, very important market sessions in every day, right? We know that right around the world. So that's extraordinarily important. So we're getting the whole world's view on whatever instrument we're looking at for that day. And in the end, we get a close. But a week gives all of those days and all of those sessions a chance to consider a level and either break it or respect it. So that's why it's so important. It doesn't mean that you're trading a weekly chart per se, but you're getting the information from the weekly chart that's going to set the tone for the next few trades that you're going to put on. So daily and weekly closes are extraordinarily important, even if you're trading a 1 hour or 15-minute chart.
Yeah. And also, Ty, a lot of people don't even think you're talking about sessions only. The weekly is also where the bigger institutions and banks increase their positions or decrease their positions. So if you think about it, most people, especially in currency trading, most of these big institutions always have positions open. They just decrease and increase them depending on whether they think it's more bullish since that weekly close or less. Once you start to think about that, that's where that game changing moment also comes in, which I think is cool. Beautiful weekly close here on the silver chart, which does suggest that, again, metals are starting to look more interesting. We've got copper, we've got gold, we have silver. They're all showing those signs. If you actually looked at an iron ore chart, it's also there. Some members coming in, mentioning a couple of things. Obviously, Sell by the Bell liking silver. Great to have you here, Ozzy, Braden, Charles, Nick, Frasado saying, I'm trying to learn to join the party in the beginning, not the end. Great way to do that, Frasado, is to start learning things like accumulation patterns such as Wyckoff accumulation and distribution. That's a great one. We've got Michael coming in here from Mornington Peninsula. Hey, man, how are you going? Hope you're enjoying it down there. And then Deadly's86 says, weekly range is good to look at. Funny you mentioned that. We might be going through one of those, I think, very soon. And Grace saying here, should we consider the commitment of traders when we trade gold? Now, commitment of traders report is certainly a more advanced technique. It's not something that everyone knows about. It's kind of like a weekly report that gets published showing you different hedge traders, market managers, all of these types of things and what they're doing. If you are trading a certain size, you have to report this to the institution, whatever, governing bodies there are, and basically have to say, hey, I've increased my position or decreased it. That is a very long-term strategy generally. You can use it with price action, but you need to understand that it's going to be weekly close based and usually holds for 3, 6, and even 12 months when you're starting to apply that. As a scalper, as a day trader, it's more important to know that when you are breaking through these closures, such as weeklies and dailies, you can use those to gain a bit of a bias on what you should be doing on the smaller timeframes. E.g., gold last week, we had that beautiful daily setup, 2-hour setup, and then we could use smaller timeframes to ebb and flow those trades. I think that, and same with US 500 as well, Ty.
So I'm actually just wondering, Tom, how long have you got to actually inform them of that trade? Because I know you've had to do that quite a bit recently.
Yes. You mean well, it's always delayed. So I think they have to get their point through on Tuesday if I'm ready to close a business, and then usually get it by Friday. So it's delayed, and that can also be a very big factor if you don't have a higher time frame. So I actually suggest to most people, start with your weeklies. I even like monthlies. Start with your weekly closures. Think about those. Think about the daily closures. Understand that that's where the biggest flows are going. Gain a bias on the higher time frames, which is legitimate bias because you're looking at price action. Then go to the smaller time frames, and using the higher time frames, you've keyed out levels. And when a higher time frame level is hit by the smaller time frames, that's where you gain those edges to get your 10-1, your 5-1, your 7-1 style trades. It's a game changer in my opinion anyway. And you can see it actually here again on the dollar index. We're sitting on a weekly. We've talked about this level. I'm actually finding the dollar incredible. Maybe, Ty, you can enlighten me to what the dollar is doing right now, because I would say I am quite confused at this price. And when I see confusion, I usually stay away until I can make something of it. So we haven't talked about the dollar this week. What are your thoughts actually here? Break it down for us, I guess.
Yeah, look, well, look, it hit the mark that we needed it to hit, right? Like we knew that that sort of 106 was a very important level for it. And if it broke through there, like we said last week, if we got to close above the previous highs, and it had to get above 106.50 in order for that to happen, and obviously didn't. This was probably set to go to 108. I think like it had huge legs. I think it had huge legs if it did the job. Another reason why we don't do it until did we personally trade the dollar index, which is effectively shorting the euro, when when it was going up to the 106? Absolutely, we did, because that was a classic technical analysis trade. But once it got there, that trade is over. And this is why I think when we're in a scalping mindset, like, or even a swing trading mindset, and not a long-term position mindset, like, there are times for long-term. There's no question about that.
Oh, yeah.
But right now, it's not a long-term play. Really, the best plays that you're going to have are the short and sharps. Now, if you entered when we wanted to enter the dollar index, when shorted the euro, when we wanted to short the euro, if you weren't taking some sort of profit at 106, or at least taking some of your position off at that point, you probably need to look at your strategy a little bit, I think, because really, that was always going to have problems getting through that zone. Now, if it did get through it and close above 106.50, it's a different story. And then we look at it with fresh eyes. But that target was hit, and we're really not surprised that it actually sold off. What it does from here, it's going to be very, very interesting. It's holding on for dear life at a very, very key zone. The next key zone for the dollar index, it's a pet favorite of mine. I love the dollar index. Its next real zone is 104.20 to 104. So if we see a breakdown below this, probably 104.80, I think it's a pretty easy run down to 104.20 to 104. If that level breaks, that the floodgates are basically broken. That's the last line of absolute defense. But I think there's enough price action here. There's been enough resistance over the last little bit to say that, we've got to give it its chance to hold. There's a 20 moving average on the weekly there, obviously. Let's give it its chance. We're not going to write it off just yet, I think. We just need a bit more.
What I'm doing, Ty, is I'll be interested in the 104.20 myself. That's my level. So interesting you say 104, 104.20. If I see a nice turn that's replicable around there towards the buy end, of course, I would be interested in that. Probably think it's a post-CPI trade. So again, the inflation on Thursday is where I'm going to be looking. I think it's chilling until then. And if we do get a breakout past that 106 and a closure, I think it's going to be beautiful currency trading, a super long dollar at that point from the way that I see it on the charts. And as you mentioned before, 108. So to me, it's in the middle of nowhere land. You probably still have to go with the bull side, but I'm going to go really neutral, and I want to see reactions.
Yeah, I think it's very neutral right now. I think it could go either way very, very easily, and I think I'd be comfortable enough with both of them. If I had a preference, I think I would like it to go to the moon for a little bit, to use someone else's phrase, and that's the 108, because I think that would really open up the floodgates for some good currency momentum on quite a few pairs, actually, not just the euro. So my preferred would be probably that it goes long, but I would be taking short opportunities as well. I wouldn't be concerned about it. That's for sure. I think both of them have got legs.
Well, it's that time of the day where we talk about our favorite trades of the week. I'm going to go over to oil. Used oil a few times recently, and that's because oil is right where I would expect it to come down to after doing that really nice strength move that we spoke about over the recent weeks. So we saw the breakout, of course, of 181, kind of 80, that pushed to the 84 a barrel, which is for US oil, which obviously we thought was a key resistance. And now it's pulled back to two things. So we've got what we call an anchored VWAP here. So VWAP is always a good thing to keep on your charts. You can get that inside of the TradingView platform with Pepperstone attached. And then, of course, you also have the daily 20 moving average sitting at the same level. Plus, you've got what we call the classic roll reversal zone. And what roll reversal is, guys, is where we have like a resistance. So effectively a topping of a channeling zone here. And the market comes back from the top to test that level. Now, you can already see there's been a bit of a reaction. I've got a level broken down from around 80.60 to 81.40 a barrel, and I'm looking for a reaction towards the bull side there. And we're starting to see that appear. You'll notice here at the moment, we've got this 2-hour 20 moving average respect twice. What I'm looking for actually is 82.50 a barrel breach. And I actually want it to go quite a lot higher, then pull back a little bit, and then look towards the long. So for me, this is a very important point for US oil to hold. I want it to hold here. I think that would be pretty nice. And I'd like to see it past 82.50 a barrel. But I'm willing to see also how it even structures up. It could do something like this and that. But I am looking for the bull here. Yeah, and I know you're going to like it, Ty, because it's daily 20 moving average.
Yeah, absolutely. Absolutely. Yep. I think it's done. Look, I think oil's been a fantastic trade. Like we've been, you know, bullish when we needed to be bullish and bearish when we needed to be bearish on oil. And yeah, quite frankly, the technicals have played out beautifully. It's not always that way with oil, by the way. Like, it's not, at the moment, it's been perfect. But yeah, when we get you know, different elements of the world markets affecting the oil price, and we're talking about OPEC and things like that, technicals kind of can go out the window. So you've got to pick and choose your battles a little bit with oil. And it's the same with gold a little bit, in a sense. Like, sometimes gold can be extraordinarily technical, and other times it can just turn to crap. And oil can be a little bit the same. But right now, the levels and the technicals are at play and playing very, very nice. So I think that it gives us really good opportunities. You're right. The 20 moving average is extraordinarily strong. We love it. 82.50 is probably the level where you'd be taking some profit if you get a little bit of a move. But I like it. I like it a lot.
Yeah, I'm even looking at an 8250 plus break, really giving us a new high, possibly even
so.
85.50 a barrel. Like, I'm pretty bullish on it if we can achieve such things. Now, Ty, you have your trade of the week, and I believe it might have something to do with an index that's a bit of an oldie and a goodie, and that's this one here. What are we looking for in particular for the UK 100? The FTSE's back.
The FTSE is back. I reckon it's back. I love the FTSE because it's a little bit technical as well at the moment. And you know what I like about it, Tom? It doesn't care what's happening in the US. It doesn't care what's happening in Australia. It's its own damn market, and it plays the game. That's the one thing about our ASX 200, which can be quite frustrating at times, is that it's so reliant on the US data and what the US is doing overnight that it sometimes forgets its own economy. Whereas the UK is an independent index in my mind that actually is one of the rare ones that actually, you know, ebbs and flows according to what it should be ebbing and flowing to, which is actually the UK economy. And that means that you don't have to be necessarily doing the same thing as the S&P 500, right? What we've been doing here, similar to, interestingly though, and we will look at the Russell in a minute. I know you think the Russell's a bit boring at the moment, but I like the Russell and the UK 100 because they're actually considering what is a very interesting period that we're in overall worldwide, and it's going sideways, much like the Russell is as well. And I think the two are kind of sinking a little bit at the moment, where they found themselves in a nice little range. And for the UK 100, this is my pick for the week because it's done something that's a little bit interesting, or that gets my interest anyway. We can see clearly we've got a little bit of a channel drawn there where the price action's been. On the weekly, you can see we've got about 6 or 8 weeks of action there. But you can see that even though we landed on the base at around that sort of 8100, it didn't quite make the same high as the previous high. Okay, so the high that we've got now is a little bit lower than the previous high. So that tells me straight away that we need to be on alert a little bit, because if we get a break of this support level at that sort of 8100, there's a very strong opportunity that we might get back to the 8,000. Now, you might say it's only 100 points, Ty, big deal. Yeah, that's actually pretty good moving on the UK 100. We're only talking about scalping, remember. We're not talking about long-term set positions here. So 100 points on an index like this would actually be a reasonable move. So the fact that it's made that lower high tells me that there could be a little bit more weakness at this support level than there was at the previous one, because obviously the previous one didn't have this failed attempt at going higher again. So we're watching with a great deal of interest now at this 8100. If we get a daily close or a weekly close, God forbid, below 8100, the week, like the trading week next, I would be looking for a move down to that sort of 8,000. And we know it's a very, very strong level, extraordinarily important visual zone as well from the round number perspective. So for me, I'm looking for a daily close below the 8100. And if we get that, I'd be looking at targets down at around that sort of 8,000 as the next support zone for it.
Yeah, it seems to prove pretty well to the high as well. One thing I noticed, I just wanted to kind of chime in. This looks very similar to what we've actually had recently in some success with Tesla. And basically, we had a lot of dojis, which effectively these are. So these are equilibrium candles, causing, of course, what we call a channel. And if the market comes off a coil like this, a very strong coil, tends to have a fairly aggressive break. So as Ty mentioned, probably quick and sharp if it does do it. Either way, I mean, at the moment, of course, presenting more negativity because of the lower high. But there's even a chance that if it goes to the upside, I could see it nailing 80.
Oh, most definitely. Yeah, most definitely. I think the important key zones are a daily break around those blue lines that we've got there. Those blue horizontal lines are your key.
I agree.
A break of 8,300 or a break of 8,100, and you're going to see a wave in either direction. I'd be happy with either. I'm just more alert to the downside because it made a lower high. But that could change very quickly if we see some momentum kick up here and a test at 8,300. I'm very happy with that. So no problem.
Braden says here, it all comes down to the CPI, does it? Yeah, I think in many ways, like what news is it's not so much you have to be terrified of news or anything like that. You need to understand that news gives the market an excuse to move to the next level of equilibrium, the next position, wherever that might be. So it usually find that a lot of pairs will sit on very key supports or resistances or key levels just before news, and then news is given as the excuse to break those zones. So I think in this case, I just had a look at JP Morgan's CPI game day. I think it's over on our X account as well. I posted it, and I think it was 82.5% of their expectations are bullish towards the market, Ty. So I take it with a grain of salt, those game day things, but interesting that they believe 82.5% of scenarios are bullish for the market. I don't think I've ever seen a game plan day where it's all bullish. That usually worries me, frankly. But yes, what you're looking for is CPI is the excuse. The market will come to a key level. It'll breach that, or it'll find as resistance, and that will give you that after release momentum that you want. I just thought I'd bring over Tesla, of course, a great success. Hopefully, a few people have been able to figure this one out for themselves over recent weeks.
But
it's very
chart
similar
on,
to what I had before.
There's no chart on the screen at the moment.
Oh, no chart. Sorry, guys. We'll move over to Tesla. Here we go. So there's Tesla. And basically, I just want to kind of reiterate, this was a very similar setup to what Ty was seeing on the UK 100. In this case, of course, it broke to the upside. But notice it was a coil. It sat there for 1, 2, 3, 4 weeks, which is about the same time as the UK 100, Ty. And it went... of course, in this case, ballistic. And I think if you looked at these enough times, and of course, we're playing stats, if you look at these enough times and you see enough breaks, I think most of the, a higher percentage of the time, Ty, they're going to be quite large, quite fast breaks because it's the nature. You've sat around, you've got what we call a pit or a pullback in time, which is just sitting sideways. And then generally there can be very explosive moves. And of course, Tesla is moving up even more. I actually looked at a stat. I got sent a stat by a person, and it was pretty incredible. They basically said that if you have 9 days up in a row of Tesla, then I think that leads on. There's been about 5 cases of this, and that's led on to even further gains over the next 21 days, which, it's an unbelievable stock when it gets rallying. So certainly some interesting stuff there on the technicals. And at the moment, you don't want to fight it. That's for sure.
No, you don't want to be fighting it. But I tell you what, Tom, the 23rd of July is going to be one of the most anticipated earnings announcements going around, because that is Tesla's earnings. And this balloon is either going to pop or it could just go straight up to 300. So it's going to be very, very interesting. All of its last earnings days have produced quite extraordinary moves. Not always up. They have actually fallen quite significantly as well. So... Look, it's one of those times, it might be an idea. I'm going to throw something to Tom on short notice here to bring up that special pages that we know and love, where we have the earnings calendar with the special symbols. You know, the one where it shows who's reporting each day and each week. Because I think that if you're looking at the indices as a broad trade, or you're looking at these individual stocks, it's extraordinarily important to understand when they are reporting, not only on the day that they're reporting, but also what they're doing to actually get there in that time. Now, that's the one we love. It's really, really good. It's a good visual. But if you're interested in particular stocks or even sectors, just as importantly, that you're looking at trading into, always keep an eye on the stocks that are actually reporting around this time, because sectors can be affected very, very quickly by individual stocks, as can the broader indices, especially in the tech sector, when we know what the NAS is doing, obviously. So it's very important to keep it in the back of your mind that we are entering a very, very important period of the year, which is earnings season. And it's really important to know, if you're trading particular sectors, whether it's metals or whether it's health or whether it's banking, to know when the big major companies are reporting, because it can have significant impacts on how those sectors move.
And some of these, this is just one example, Ty, but some of these actual earnings calendars, they also have the expected moves. So you'll notice here, like let's say you're trading Wells Fargo, a lot of people probably don't think a bank is going to have a plus minus 7% move in one day. As you mentioned before, Tesla's wild. Tesla can move 15% plus minus, depending on what the options are telling us. So, as a trader, especially, you must be aware of your risks because in stocks, although there are a lot of pre and post market now in terms of the market analysis, you do get some pretty wild moves, and it's getting wilder per earnings season at the moment. Plus minus 7% on a bank. I don't think that was happening back in 2014 and 17,
No.
that kind of period. Yeah. All right, let's move over to crypto. Everyone's favorite, Bitcoin. Actually, I want to go through both because I just think Ethereum first. So actually, both of them are exactly on their res highs. So this is the supply that I'm looking at on Ethereum. You could angle this into a double bottom tie. You could claim that this is a breach out pattern area, and it is playing right on those zones. So you've got closure levels, I think, over the next 24 hours that are going to be very important. This is where the res is. This is where the bears could be sitting. And it doesn't matter whether it's this or Bitcoin. You'll notice Bitcoin had to go for it before. I've got marked out probably anything around 60,000, but 59,117 is pretty much that last high. And you can see it went up there, tried, failed, and now it's hovering. So very important point. This could be the beginning of turns for the crypto market. And I've also marked in here where I think swing zone traders will come in, which is around 64K, a breach of the last major high. Bitcoin market, not quite to the level I wanted, which was 51.8. But you never get.
Not yet, Tom. Not yet.
No, not yet. You reckon it's still short?
Yeah. Well, look, I think that it's still got, I think it's still got legs. I still think it's got legs. Yep.
It's been a fascinating one because, of course, a closure weekly so low, not quite down to the first or second rise levels. Obviously, a lot of people calling the McDonald's pattern tie, which is just a double top. I actually quite like. I love that concept, the McDonald's pattern, saying that everyone that's going to trade crypto is going to lose and have to go flipping burgers. It's just, it's got to be one of the best memes out there. But
yeah, I look at it. Look from a standpoint. If you just go to a daily for 1 second, if we can go to a daily chart on Bitcoin and forget about the big M, forget about McDonald's and Hungry Jack's and Burger King, wherever it is you're living in the world, there's burgers everywhere. All we see here is lower highs and lower lows. We are in a dead set, prevailing, heavy downtrend. And every time, and you got your line there, first bull turn zone potentially, absolutely. Because this is one of those levels where if it does get up there and closes above the blue level there, above 59,000 and back above the moving average, we're looking at something different. But yeah, as we stand, forget about the symbol. Forget about what you're looking at here. Look at it, price action alone. It could be the Euro USD, it could be gold, it could be anything. We are in a downtrend. There's no denying that. There's no one that's going to argue that point. And while that downtrend is basically prevailing the price actions movements, we have to be extraordinarily cautious about taking long, because you could be very easily accused of trying to pick a bottom here, Tom, if you start going long on Bitcoin right now. Because really this could be just a very subtle pullback to what is potentially a reversal zone as well. So yeah, while we are seeing lower highs and lower lows, I'm not that interested in going long, and I'm still very much enjoying your 51,000 target.
Yeah, for me, 64 is just such a big zone. I actually like swing trading Bitcoin the most, so I'll be watching to see whether we can get a higher high placed in, and if it keeps coming down to most trade level or the other key zone, then cool. That's going to be very, very cool as well, and I think there'll be some nice reactions off those areas. All right, Ty, it's that time of the show again where we always ask you guys what you'd like us to have a look at. And we'll cover a couple of pairs, so definitely put that in the chat. And in terms of what I guess our kind of tip of the week is I think it's going to be that you really want to wait for your whatever your kind of systems activation step is. You've really got to wait and be consistent with that. If you're kind of like a knee-jerk reaction, I've got to buy it right now kind of player, what I would suggest, and something that I've done with a lot of people to improve their trading, and I just thought I'd talk to you guys about it, help me as well, is practice scaling. So instead of saying, okay, you've got to be all in, why not break down your position to a quarter and therefore say, okay, well, I'm going to put 25% of my position in the aggressive entry, see how that works. If you keep losing the 25% aggressive entry component, then you know what you win when you wait for the patient levels, which get you into the other 75%. Then guess what? You know that you shouldn't be so aggressive and you should be more patient. So that can be really, really helpful. I hope that helps a few of you guys out there. Good little top tip, I think, for everyone.
I'd like to, actually, I've got a top tip as well. My top tip is to let your Pepperstone representative know which city you would like us to visit, because we've got some really exciting news coming out very, very shortly that Tom and I and Pepperstone are coming to a city near you very, very soon. And we're starting out, obviously, in Australia. So we're looking at Sydney, we're looking at Brisbane, we're looking at Adelaide and Perth. Let us know where you want us to visit. We're going to run some very, very good, extraordinarily good learning seminars in those cities. They're going to be free to attend. It's going to be all fun and games. You just have to basically turn up, meet the crew, and basically have a really good, enjoyable time learning live, which is what we love to do. We are, Tom and I are secretly working on a plan to get overseas as well, potentially this time or sometime this year, and certainly early into next year. So even from other countries, if you're from the UK, from Dubai, America, let us know, because we are open to everything. We love to get around the people. So my tip is to let your Pepperstone representative know which city you would like us to visit.
Yeah, it'd be great to see what people are doing. And by the way, especially the events here in Australia, we're planning on putting them on as kind of like, just you can kind of come and register and come. And I don't think we'll even we'll probably be covering it. So that'll be really awesome to see you guys and have you come out, and hopefully we can get that done over the next, especially into the US election, because obviously that's going to be a volatile time. All right, let's mention here, Ty, a few things. So we'll go through. Braden has a comment. Well, firstly, Kia, we did cover gold before, so certainly already covered earlier in the session. Then we have odd US dollar being a discussion, and asking here from Braden, what do you think about odd USD? So a very strong weekly closure, takes the high, signals kind of a breakout in many ways, and signals further strength to 68. Your thoughts, Ty? I'll put the chart up.
Yeah. Oh, look, I mean, this was our pick of the week last week. It did all the things it needed to do. Again, we're a little bit stuck with the dollar index. I think the dollar index at the moment is at a level of support. If that support breaks down to the 104.20, I think this could continue on to potentially probably 68, 68.50, I think is a target. The previous high is in danger here if we get a daily close above this, probably 67. To me, 67.80 needs to be broken before I'd get excited about it. I think if we get a daily close above 67.80, I'd be starting to look and set plans for that previous recent high, which is around, it got to about 68, nearly 70 or 80. That would be the target, probably 100 points. So, yeah, good move. I love what it did. Even if it retests, even if it pulls back a little bit more, I don't think I'd be overly concerned. I wouldn't mind that too much anyway. But I think we do need a daily close. A daily close above that 67.80, I think would do it for me, that we're probably marching on to 68.50 to 68.80. I like it.
Yeah, I like the idea of just a daily close above here, pushing through. Obviously, I think it's a post CPI trade. At the moment, you'd have to be pullbacks being met by bull demand on the odd. And that's because, of course, there's a bit of anticipation of a rate hike as well, which is helping it. New Zealand USD also coming in. They made an interest rate decision, and that was to hold rates, which did end up sending it down a little bit. I think it's changed trend. Tie is kind of like reverse of the odd. It kind of looks like it's weak. Actually, not a bad trade at 61. I would have liked that trade there. It's a shame that we're 2 days past that, but if I was able to short around there and I'd seen it, probably would have done that. Currently weak. I could see it even on a new low. 60 would be my target for this pair. Ty, we've got a couple of other questions coming in. Great to see a few of you. If you're interested, of course, we're looking like people will be interested in maybe Brisbane, Gold Coast, Sydney. Of course, I'm sure Melbourne as well. And we've got here Calvin asking a question. Probably not the best for this webinar, but it's just saying I see you using a little bit about gammas. Yeah, so gammas, positive and negative gamma concepts. How do you use those concepts? Maybe that's a story for another day, but you can watch our show and I go through it kind of regularly over at fxevolution.com. And on our YouTube as well. So, guys, thank you so much for joining us. It's been a great week. We're looking forward to getting this inflation number out of the way and hopefully getting some good reactionaries. As Ty and I said, two of our favorite positions at the moment, or favorite areas. We've got oil, very key level, and of course the FTSE with a very nice consolidation zone. Looking for breakouts post CPI on those. And as we always mention, Ty, we love patience and reaction. We're not necessarily predicting here. What we're doing is we're setting up key levels for breaches, and then on smaller timeframes, we react to what has happened on the higher timeframes. That's one of the best ways we've found over the years. We hope you enjoyed the show. We'll see you next week. Also, links in the description down below if you want to sign up so you always get alerts for these types of sessions. Thanks, guys.
Thanks, everyone.
See ya.